Hi there, this is Pádraig here from Payroll Matters in Ireland, and today I want to talk to you about our net pay take-home calculator. In brief, this calculator will determine the income tax, universal social charge, USC, and pay-related social insurance PRSI that will be deducted from your gross taxable pay based on the information you provide about your tax credits, standard rate cut-off point, your PRSI class, and whether or not you have a medical card. This calculator is a true reflection and will mirror what you see on your payslip. There are a few scenarios mentioned at the top of our website page where the calculator will not operate the same as a live payroll system that has access to more information like previous week's earnings and deductions. This calculator is very useful for calculating how much tax a person pays normally and for calculating the extra or less tax, PRSI and USC, a person would pay, for example, if they were getting extra pay for overtime work, or getting promotion, or reducing their working hours, or going job sharing. This calculator can answer all these questions and many more similar questions. Before I go into my simple guide on how to use the calculator to get answers to your questions, can I request that to keep up to date with Payroll Matters in Ireland, please hit the subscribe button. Subscribing will cost you absolutely nothing, but may help us at Payroll Matters in Ireland, the Facebook page and group and YouTube channel. Subscribing will cost you absolutely nothing, but may help us at Payroll Matters in Ireland, the Facebook page, Facebook group and YouTube channel, to continue to help PAYE workers with their questions on pay, PAYE, income tax returns, tax back refunds or rebates, tax credits, and many more pay and work related issues. To continue making helpful videos like this one on all types of payroll, PAYE issues, and on step-by-step revenue my account guides, please don't just skip over our request for you to subscribe to our channel. We do really need your help. Okay, enough of that for now. It is not obligatory to subscribe in order to get all the help we provide to PAYE workers, either on here or on our Facebook page and our group. We have been doing all of this for free, regardless of whether you subscribe or not, and we will continue to do so for as long as we can. However, we cannot guarantee that we will be in a position to continue with this work indefinitely without subscriptions to this channel, which, I repeat, costs you nothing apart from a little effort of logging in to your Gmail account, going to our channel and hitting that subscribe button. If you don't have a Gmail account, it is very easy to set it up for yourself. Okay, so the first question on this calculator is pay frequency. The options are weekly, fortnightly, 4-weekly and monthly. These options cover most scenarios, and you will not find these range of options on any other calculator that is currently available. This section is for calculating weekly, fortnightly, 4-weekly and monthly gross to net payments. The calculator was created mainly for calculating weekly, fortnightly, 4-weekly or monthly gross to net payments for different scenarios, like if you wish to compare take-home pay for full-time work as compared to if you decided to job share or reduce your hours, or indeed vice versa, and is ideal for this purpose. We will look at an end-of-year option in a separate calculator for checking your payroll figures against your statement of liability. So be sure to subscribe to this channel to keep up to date with new material we produce. The next box is for your annual standard rate cut-off point. Take the figure from your tax credit certificate. If you have two employments, use the annual figure for the employment ID you are calculating and then repeat for the other employment. The next box is for your annual tax credit. Again, take the figure from your revenue tax credit cert as shown here. If you have two employments, use the annual figure for the employment ID you are calculating and then repeat for the other employment. There is a little trick or a sheet you can use. If you do not wish to go to your tax credit cert, you may see on your payslip where you have a weekly or fortnightly or 4-weekly or monthly tax credit, and you know which one it is. Then you can take that, and if it's weekly, for instance, in the box, you can put plus the weekly amount of your tax credit multiplied by 52. You must use the plus sign in front of the calculation. So it's plus whatever weekly tax credit you have or weekly standard rate cutoff point and multiply by 52 to get the yearly. Likewise, if you're fortnightly, you take the fortnightly tax credit or standard rate cutoff point and multiply by 26. And if it's monthly, you take the monthly tax credit and multiply by 12. And if it's 4-weekly, you take the 4-weekly amount and multiply it by 13. This, as I said, is a cheat or a fast way around it, or the lazy person's way around it. The most accurate way to do this is to take the annual figure from your tax credit cert. And in this way, you are also checking that your employer is using the most up-to-date tax credit cert for you. The next box is for PRSI class. The default here is A because this is the one most private sector employees are on. It can be one of the others in the drop-down, which apply mostly for civil and public service workers. It will show you on the payslip. Don't be concerned if you see a 0, a 1, or any other number following it. All we are concerned about is the letter. The reason for the medical card question is because medical card holders pay a reduced rate of universal social charge. You should see this on your tax credit certificate like you see here. If you are not on a reduced rate, be sure to notify Revenue that you have a medical card. We have a video on our channel on how to notify Revenue that you have a medical card. Pop a comment underneath and we will give you the link if you cannot find it. The next box is for the taxable pay for the pay date you are looking at. Some payslips will tell you what the taxable pay is, like this example here. If you have this figure on your payslip, just enter it. Taxable pay is your gross pay less any non-taxable payments, such as the remote working daily allowance of $3.20 per day, the payment of travel and subsistence expenses, and the small benefit exemption deductions. Examples of non-taxable deductions are pension and superannuation payments, PRSAs or AVCs. On Revenue's website, taxable pay is defined as taxable pay is your gross pay less any contributions you make to a Revenue-approved pension scheme, a Revenue-approved permanent health benefit, income continuance scheme, a salary sacrifice arrangement, personal retirement savings account, a PRSA, or a retirement annuity contract, an RAC. These amounts are deducted from your gross pay before your employer calculates your tax. Deduct any of these if you have them from the gross and enter the answer in the taxable pay box. If you happen to have any of these, the calculator may give you a difference of a couple of euros from your payslip, as pensions and deductions, etc., are a complex area in the calculation of universal social charge. All the cells grayed out are where the tax, PRSI, and universal social charge are calculated. The net take-home pay will not necessarily agree with your payslip, as net pay does not take account of union or pension or any other deductions. Please note that net take-home pay is equal to taxable pay less income tax, pay-related social insurance, and universal social charge. Your next step is to complete the actual calculator, which you will find on bppm.ie, the website which stands for Boyle Payroll Project Management. On the Payroll Resources tab, click on Gross Pay to Net Pay Calculator 2024.php and scroll a little to see the calculator. Good luck with it. If you have questions, you can ask them in the comments or on the Facebook group Payroll Matters in Ireland. Please help us produce more helpful videos by subscribing to the channel. Really need your help, and as I said already, it costs you nothing to subscribe. See you next time.